Pips pay my bills. Pips pay my bills. Pips pay my bills.
What strategy do I use? If I had to sum up what strategy I use, I would say, definitely market structure, supply and demand, all right, Fibonacci, and I would say, of course, I'm using pitchforks. Of course, I'm using the 50 moving average. Of course, I'm using the MACD. Of course, I'm using trend lines. Like, I'm using all of those tools. Of course, I'm using fair value gaps whenever I get a chance to. I'm using all of that stuff. But to put it into a strategy and to call it something, what strategy do I use? It's called FTB. Follow the banks. That's the strategy I use. The FTB strategy. You never heard of it. It's the FTB strategy. Follow the banks. And it's incorporated of market structure, supply and demand, fair value gaps, trend lines, Fibonacci, pitchforks, whatever I need to use to know where the money is going. Now, out of all those things, the tool that will direct me to where the money is really going is going to be supply and demand, Fibonacci, the Fibonacci retracement, and the Fibonacci extension. That's going to let me know where the market is going. All right. And pitchforks. Pitchforks is going to let me know where the market is going as well. So those three is going to help me track where the money is going. The rest of them, trend lines, fair value gaps, imbalances in the market, all of that stuff is going to help me time my entries. You know what I'm saying? So that's pretty much my strategy in a nutshell. How was you able to hold a trade for a week? The only way I'm able to hold a trade for a week is if I find it from the daily and even looking at the weekly. All right. There's no way that you're going to be able to confidently hold a trade for a week if you're just scalping and then you want to all of a sudden hold it. You're scalping on a 30-minute chart. You're scalping on an hour chart. Or let's just say you're day trading, even day trading, finding a trade setup on the hour chart. That ain't going to really cut it. It's not really going to cut it. You're going to have to go to the daily chart and pretty much find your setup from there. And then from there, it allows you to hold it. But you definitely got to look at the weekly as well. That's really the only way you're going to be able to confidently. Now, you can, I remember back in my early days where I had a demo account and I took a 10-cent lot size, held that boy for three weeks, and ended up having like $400 off the 10-cent lot size. I'm talking about held a trend for this big. That was by luck. That was because I had 5 demo accounts, took a trade out, and forgot I left that trade running. There I go next month. That boy, $400 off a 10-cent lot size. And then you go stunting like, yeah, look what I did. Look, hey, have anybody ever done that in y'all beginning stages where you had all these demo accounts, took a trade on all of them, forgot to close out one and let it run? Have anybody did that? I'm like, man, I wish I would have did something like that on my real account. You feel me? Hey, we be too scared on that real money. We ain't hold nothing for no money on no real money. But have anybody done that though? Let me know. So what's going to separate us is that a profitable trader knows how to stay disciplined. See, I want to say a pro trader, a profitable trader can stay disciplined for the most part the whole month. It'll look like 11 trades, 2 losses. Like, that's a pro trader. Like, they're going to take losses. But it's going to be like win. And then they took a couple little losses. One of them was probably like a nice size, regular loss. The other one might be they cut it short. So you see like a very little loss on there. And then they'll go back on another hot streak. Win. that is going to separate, you know, a novice trader versus a profitable trader. Shout out to Marcus Welch. He said, have you made adjustments to your strategy over time? Have I made adjustments to my strategy over time? Absolutely. So I started out with every indicator on my chart, and the indicators was all telling me what to do. Wasn't even looking at price no more. Couldn't even see candles. Okay, so then I basically stripped all that away, and then I stuck with the stochastic. I got it at like 5, 3, and 3 is my numbers. 5, 3, and 3. I'm just waiting for the lines to cross over. All right. So what I noticed with that was, and I would use the 50 moving average. I was using the stochastic. Matter of fact, let me show you on the charts. Let me see if I can bring it up, because I think I still got a template of it. So this is where I started out from the beginning. Well, not from the very beginning, but the next phase of my strategy. So phase 2 of my strategy. So now what I was waiting for was when these boys cross over, that's my time to get in. The problem is that I could never get this joint to cross over at the same time. See, that was racking my brain and giving me a headache. The stochastic, it was crossing over here at the bottom. The blue line was crossing above the orange line for a buy. And the white line, which is my exponential moving average, the 15, it had crossed late. So I was getting in late. So I just was racking my brain with that, and it was never working. So then what I ended up doing was then adjusting it. I tweaked it. So now we in phase 3 of my little strategy. And by the way, this was all bull crap. This is all bull crap, but I'm just telling you how it went. So then I would notice that it curled down here, and as long as we were pushing up through the halfway point of the stochastic, which is the 50%, I'm good. That means I'm in the buyer's market. According to the stochastic, I'm above the halfway point. So I was like, okay. So then all I did was just wait for the moving average to cross over, which is the 15 cross over to 50. So once I waited for that to happen, then I would just take a buy, because I knew the stochastic was already past the halfway point. That still was giving me fake out reads. It was okay. It started winning a little bit better, but it just wasn't. I knew I was missing something. Yeah, it's delayed. But the problem is I was getting in late. I was getting in at high points. I was getting in too high, or I was getting in too low. The move had already happened. You know what I'm saying? Like, let's replay it. All right. So let's see when it's crossed. Okay. So it finally crossed. All right. So now I was getting in moves like this, and sometimes those candles would shoot out really high. So I had terrible risk to reward. And normally I would put my stop loss down here, and you got to go a 1-to-1. But guess what? The problem is I wasn't going 1-to-1. I'll take my entry and then catch about a couple pips and get out. So I'm really going in catching a short amount of pips, but then my stop loss, and I'm willing to risk this much, 23 pips. So you see what I'm saying? Like, my ratios were off heavily trying to trade like this. It just wasn't right.